Alright, so hello everyone and welcome to this video on market commentary. The goal of this video is to talk about what transpired on both Dow and Gold last week and what we'll be looking going into this week. So, but before we get into this video, I want to talk about something really important because I feel a lot of traders tend to leave the very important information behind, which is very crucial when it comes to the decision making on the market. So essentially, price usually do two things. It doesn't matter what model you trade. It doesn't matter if you trade Bollinger Bands, RSI, moving average, ICT, supply and demand, support and resistance. The model you trade doesn't really matter. Price usually do two things. It gravitates towards liquidity and rebalances imbalance. So this is what price usually do, and if you've been paying attention closely to price, this is what usually transpire. So what then is liquidity? Liquidity is simply areas where resting orders accumulate, usually above old highs and old lows. Those are liquidity pools, and if you've been following me, I talk a lot about liquidity pools. So what price does is it gravitates from one liquidity pool to another. So this is just basically it. And also, imbalance are inefficiency created by aggressive price displacement, leaving a gap in price. This is just basically imbalance. So I want you to take note of the two things I said: liquidity and imbalance. Like I said, imbalance are inefficiency created by aggressive price displacement, leaving a gap. So this is an example of imbalance. A gap left by price during aggressive displacement. So before price reach out to a fair value, aka liquidity pool, it has to rebalance imbalances, which are usually on discount PDRAs. That's if you are looking at the bullish market, and discount PDRA if you are looking at uh bearish market. So last week is a perfect example of how price has been going back and forth, which is usually what which is usually what I don't recommend to trade. Okay, because if you notice, this is last week price action, and we are just basically stuck in this terrible price action. And last week haven't taken a single trade on Dow because of this. Instead, I took a setup. I think it's just a setup, one setup or two on Gold, and closed the week. So displacement and then price leave this wide fair value gap, also known as imbalance, just like I explained. Our next target is gonna be this discount PDRE, discount fair value gap, aka imbalance, before further continuation to the upside. Notice how price stuck in this range, even with the bullish order flow. Price feel to make more higher highs. Instead, it just gets stuck in a consolidation, which will look for more setups in discount. So I also talk about discount, premium and discount, where price gravitates to those levels. So this is gonna be another lecture for a different day. So going into this week, the focus will be on seeing price trade into these discounted levels and further continuation to the upside. This is what I'll be focusing it. Okay, and this is gold. Same thing goes for gold, discount and continuation. So what we are looking to do for this week is wait for discount, those discounted level to get traded back in, so before for that continuation to the upside. So I'm really sorry if I'm not really sounding very audible. I just finished working out and I'm already feeling like shit right now, so my apologies. Discount PDRA, this is where you look for the most high probability longs setup in bullish market condition. So same thing goes for your starting and good. Focus will be on team price trade back into these levels before we'll continue further upside. So this is what I'll be focusing going into this week, and in case price keeps consolidating, I will move to the sidelines to for equity preservation. And just like I said, the reason why professional traders like me and others make money in the market is not because we are good at trading or we have like a secret to keep us going, but I know the right time to stop. I know the right time when my model is most likely gonna fail, and I avoid those market conditions. So you have to know when your model is not really effective, and you do that by backtesting. That's how you know when it's most likely not going to work, and you avoid those conditions. Just think of it, if you can avoid most of the losing position you've been taking, wouldn't you be profitable? So this is it for today, and make sure you join the Telegram community and also Twitter. I share a lot of update in price, so the link is going to be in the description. I'll talk to you soon. God bless.